Hey guys, welcome back to the channel. Today we've seen a flash crash, but it's not the typical flash crash that many of us have come to know Bitcoin and cryptos for. Today's flash crash has been very minuscule. However, the market sentiment, the emotion has been running hot. I've seen it in the comments, I've seen it in X. The replies from people are phenomenal compared to what the price action has actually done. Now, it's so far has taken out the low of the 15th of August by about 1.5% from the current price. It's about 1.67% to the low. Now, that doesn't mean that this is the low for BTC, but it does bring on a bit of an explanation, I think, around what is going on right now, at least what I think is going on based on my own analysis. So that's what we have to get into today. This flash crash, along with the crash on Nvidia getting a subpoena, millions of dollars wiped off the market cap here. What does that mean for the stock market? As of course, yesterday we were looking at the S&P 500 getting very close to new all-time highs. Does that change the analysis at all? Does one day change the analysis? You might have the answer to that. But if you don't, make sure you hit the subscribe button down below. It's your home of macro cycle analysis. You're joining me, Jason Pizzino. We're covering Bitcoin, cryptos, the stock markets, and the real estate cycle. The works, the lot. This is your home for that. If you are a returning subscriber, thanks very much. Hit the like button. It does help the channel out a lot. All right. You've seen this before. It is our 18.6 year cycle. We are in the winner's curse phase. Not much more to be said upon that. All that means is asset prices are going up on the longer term. Day to day, we are 100% guaranteed to see corrections. Now, this was the major correction we saw here. There was 2% for the S&P 500 after many tops coming out at around 5,670. That is most likely due to Nvidia getting DOJ, well, the DOJ ordering a subpoena in escalating antitrust, yada, yada. It's more news headlines for the market. However, it doesn't seem like it's going to be long lasting just based on the macro view here. Now, I've also talked about where the price targets are, or the price levels are to remain macro bullish long term. So that's what I want to discuss in today's video, along with timeframes as well, in particular for BTC for this correction, as we've back in March talked about the 3-day down signal, which called the top. I don't know where the price targets are going to go. All I can see from the signals themselves, it was suggesting in March for BTC that the price was not going to pass an all-time high. There was a higher probability that it wasn't going to happen, but at the time, you know, the greed was extreme. Now, the same thing occurred for the S&P 500, 3-day down signal at the top from the all-time high. And at the time, I did the video here in July saying, well, I think the market's likely going to be down or below the old all-time high, or the current all-time high, for longer than many are expecting it to be. And that's exactly what has happened. It's pretty much based on this really, really solid signal. Now, we go into far more detail about that and how to use it, because the tools are only as good as the tradesperson. We're doing this in TIA Premium. Links to this are in the video description, but if you just want a taster, you want to start to get your feet wet a little more, sign up to the free crypto and economic report. You guys should have that in your email inbox as it went out yesterday. So that's what we're looking at for today's update. Winner's curse phase, macro cycle still in play. Yes, we had a 2% down. Bitcoin and crypto people went absolutely ballistic from this tiny little move to the downside. It freaked everyone out, just thinking it's over. But what we have coming up are more economic announcements, more economic news, more CPI, more PPI, more everything during this period until we lead up to the election. As I've said many times before, I think this is one of those uncertain periods, your summer lull, the period before the election comes up, and these times are uncertain. Markets don't like uncertainty. They're trying to decide whether it's time to go up or time to go down. The other thing that's come up is the other stock markets have also fallen. We got the Dow Jones down 600 points. Obviously, the NASDAQ also fell. I've gone through all the Nvidia stuff here, basically 400 billion wiped off their market cap, and that's obviously taken effect on the stock markets themselves. Now to the price targets. 5,400 points for the S&P 500, just using this current range. And if we use the all-time high to the Japanese yen carry trade crash low, again, 5,400 points. That's the first level to look out for. Now, in previous videos, I did discuss this correction here around similar seasonal patterns for 2023 going now into 2024. So we saw this in 2023. You can see the first correction leg, the second leg, and the third leg. Now, we've seen the first major leg down. Maybe we're in the midst of the second leg down here. Now, it does not mean it has to go lower than this current low. It can, but it doesn't mean it has to, just like it did last time. You can see from the NASDAQ, the same sort of thing happened for the NASDAQ. 1, 2, 3, and you typically get these sort of 3 wave moves to the downside before the market's ready to turn around. It can be 2. Often you do see these 3 wave areas, but even in this move here, the NASDAQ only went slightly lower in the second, and then in the third, took it out and then quickly reversed. So be on alert if you see the second leg get close to that low, or even the third leg break that low. Be on very high alert in case the market quickly turns around and powers back above. That's what we got for the S&P 500 going in out of that low last year. This thing basically just went straight up and then barely had a pullback. It paused for a little bit and then took off again to a new all-time high when everyone was talking about a major recession, similar to what's going on right now, another major recession. Now, I'll give you one other tip here, one other little signal when it comes to these corrections. Note how the volume was decreasing on the way up. Now, these typical signals, it doesn't mean they have to happen every time. I just like looking at probabilities. The volume was underneath the moving average here. Now, the market often, not always, but often likes to come back to fill up that particular volume as well. It was a very substantial move out of what was an extremely fearful time for the market. And so far, the price is about a third, maybe even half the way into that particular move where the volume dropped off. So there was buying action happening here. However, you didn't have the buying volume come through as well. So maybe it needs to refill this area. So if you want to have a look at that, going back to previous moves to back test it for yourself, I'll do a couple here. You can see this move into that final peak, into the all-time high. The volume was underneath the moving average, and now the market had to backfill the price action to make up for that lack of volume. It really wants to test where the liquidity is in the market. Having a look back to another area, you've got a couple here, low volume, move is going up, and then it comes back and tests some of that movement there. Doesn't always test every single last price, but if you're getting these low volume moves, a little bit of low volume up there, usually comes back to test where that liquidity is. Now, I could spend another half an hour going through each of the examples. Not every single one is going to work out, but often you do see something like that, the low volume into these final run-ups, these final peaks, comes back, tests all that volume, fills it in, and then keeps going. Now, I've got something else to come back to with the S&P 500 and Bitcoin. Pretty interesting stuff for this period of September. Something new that I haven't looked at in the previous 2 videos where I've talked about the S&P 5, where I've talked about Bitcoin, that is. But first, let's have a look at the Fear and Greed Index, one of our market sentiment readings here. Still in fear. Today, yesterday, last week, last month. Pretty good signs here that the market is still quite fearful. A lot of fear through the market. Prices are still hanging around in the high 50s, sometimes low 60s, and obviously we've hit low 50s as well. But this is what we want to see for a refresh in that market sentiment, just like we've seen every other time throughout the bull markets. The ETF flows have also been quite negative. Obviously, the days have been down. And so far for that August low, back at this period here, you had the most amount of outflows happening at the low. So a lot of people selling off at the lows. It doesn't have to call the exact low, just like you saw back here, a really big sellout in May, which was one of the significant lows, around 56,500. The price is now trading around 56,500 as I film this. But as you see with those significant spike lows, basically where the attention and the fear really skyrocket, often around those periods where there's the most amount of selling going on, just like what happens at the most amount of greed. We covered this one here as well on the channel. Basically that June 4th top, everyone thought it was ready to go up to 80K. Lots of people bought in and then it dumped from that point. All right, so that leads us over to BTC. Now it's sitting slightly above the 50% level of the ETF range. So ETF low into the all-time high, through the middle there, 56K. So it's going to be a very important level for Bitcoin to hold. Now, as I said in the title, what is the lowest price that Bitcoin can go and still remain macro bullish? We're looking at the macro chart here. So let's have a look at the macro chart. Let's look at the monthly chart. Essentially, I'm looking at the first 50% level, the cycle low to the all-time high, 50%, 44,600. You might have seen me talk about that one before as well. Now, I'll mention 3 price points and you can assess them as we go. The first, which would be the first one to get hit if the market keeps falling, is your monthly swing top, so that lower swing top of the bear market at about $48,000, which also lines up with the ETF top in January at around $49,000, which also lines up with the August low at $49,500. I'm looking at Bitstamp, some other charts around 49,000. So a pretty level price point there at 48 to 49K. Now, if Bitcoin dropped to that level, the bull market's not over, but it's an important level just to have a look at. It's about 12, 13% away. That's why I've got this white line through here. The next level down is a 50%, 44.6. We've talked about that. Even if Bitcoin drops that far, the bull market is not over. Remember, we look at 50% and we assess the market on each of the 50%. Above the 50%, it's strong, and below the 50%, it's weak. And that often shows up with a lot of strength and weakness throughout each other chart. So I'm just going to put up the first one here. So this is the first cycle. You got the Bitcoin chart going from the cycle low to the all-time high. There is your 50% level as the market started to collapse. So we're assuming that the March top is the all-time high and it's possible that the game is over. If that's the case, you would need to see Bitcoin come back to the 50%, break down from it, and then close underneath that 50% level. And then you can see this retest happened with a fail and then basically fell out. Remember, this is the macro chart and macro moves take macro time to play out. I know we want to try and figure out what's happening from a daily chart to tell us what a macro move is, but from shorter term timeframes, you're only going to get shorter term moves. And so that's why we're looking at the monthly chart here. So in terms of the 50%, now I've got it on log just so you can see it a little bit easier. There's the cycle low, there's the top, 50% test, very, very, very weak bounce, and basically a close underneath that level again. So that's the first time there, and you can see the 50% broke and the game was basically over from that point. The next cycle, all-time high, 69K, cycle low, $3,100. You can see it came back, tested the 50%, bounced, and then closed underneath it. So game was over from that point. Now, if we have a look at the April top, one might think that that was over from there. You had the May dump into the June dump, and then July turned around and ran into a new top. But at the time, you didn't have this data here, of course. So if you want to see that, this is basically what it would have looked like at the time. Get my words out. And basically, you had May close higher than the 50%. So it tested the 50% within that 1 month. Really, really big move. If we fast forward it another month or so, 10x here, that's June coming into play, higher close. There's July, higher close. There's August playing out now, higher close. There's September, correction. Now into October, big move up. And then into November, that's the final move there. And then the correction, it fell back underneath the previous tops, which is a weak signal. So what we're focused on is the 50% levels. Bitcoin managed to hold out there, basically hit the 50%, closed above it for 2 months, and then that third month, it turned around. That brings us forward to today. So let's have a look at the 50% for today's action. There's a cycle low. This is the current top, because who knows, Bitcoin might go a lot higher from here, and then we'd have to readjust the 50% levels, of course. But for now, this is what we have. This is the data that the chart's given us, the market's given us. 50%, it'd have to go underneath 44.6, and I would at least want to see, for the bears that is, for a downside, you'd at least want to see the market close underneath the 50% level, underneath 44.6. Now, to throw one more number into the mix here to make it just that little bit easier to look at, we'll call it, looking at the ETF low, there it is at $38,500. So that would be another significant level because, well, that's the breakout move, the pullback from the breakout move after it tested the tops and then took off again to this next top. So 38.5 is also a very important number. Finally, the levels back at 31.32. I'm not going to get into those 31.32 today. I think the most important levels to look at from here, especially after this last 5 hours of people freaking out with the 1.5% drop on Bitcoin, well, that 1.5% from the breakdown of the lows. So this is the price point here at about 56.5 to 57, and then it basically took off down to 55.5. At that point, that's where things really started to get quite emotional with a lot of comments coming through. At that time, that's when I see my notifications go off when that tiny little area breaks and then it basically closed above it. Just for that tiny period of time, the notifications went crazy. So that's why I think there is a lot more emotion in the market for much smaller moves, which often mean that we're somewhere around some sort of low forming. You know, we've been in this low formation for ages, but that's what happens. It happened back here. This took months, and the consolidation in general took 7 months. So when people say, you've been saying that it's going to go up for months. No, I haven't been saying it's going to go up for months. I've been saying that the market is trying to find a base for months, and our 3-day down rule has told us that. It's basically said that from that March period, that it was likely going to be down for longer than many had anticipated. And if you recall from March at this low, one of our seasonal dates as well, look at that on the 20th of March, at that area, a lot of people said buy this low at $60,000. That was a really, really big call. And I know, I remember hearing that across the board, across social media, and Michael even did a post and said, this will be the low that many wish they hadn't bought. And so that low has now passed. A lot of people have forgotten about it. And we are coming up to 6 months from that particular low itself. And from the top, which was on the 14th, we're now 10 days out from a full 6-month period here for being underneath the old all-time high. So I've given you 3 numbers to look at. You've got the lows here at 48, 49. That one's not going to break the bull market. A move down to 44.5, not going to break the bull market. Remember, this is on a closing basis on a longer term view, in particular the monthly chart, and closes underneath the 44.6 has the potential to break the bull market. Do I think it's going to get there in terms of a close? No. In terms of price, I don't even want to guess that. I did not guess that it would go to 49K. I didn't guess it would go to $74,000. I don't like price target guesses because I don't think that many get those right, and I don't want to throw another one out there because at the end of the day, they're all opinions and everyone's got one, right? So let's just focus on what the chart's doing and just look at the signals that have worked in the past and then try to weigh up the probabilities in our favor to make the best decisions at the time. I like these areas under 60 grand for buying BTC. I've talked about that many times. Members know what my actions are in terms of what I'm doing in the market. You can find that in TIA Premium. Links are right down here. But for now, the structure is still intact, even if it does get another flush out. And September can do that. We've seen that before in September. September 11 here. You got that back in 2023. Just flushed out those August lows ever so slightly. In terms of how much by a percent? 1.7%, but the volatility was much lower than it is now. So maybe it would flush it out just slightly more. But do note that the close was higher there on a weekly basis. Higher lows started to form, and then it took another 4 or 5 weeks until it actually broke out from that level. So they're the prices for the bull market to remain intact or for it to break down and the game's over at that point. The other piece I wanted to look at was the timeframes. I said this in the intro. We're getting very close to the end of this time frame here. So the signal that I've talked about for months on end that has helped us in the market, basically 3 days down at the peak, suggested 4 to 6 months under the all-time high. Now I'm looking back at previous consolidations because Bitcoin's done this every single cycle. It pumps up and then takes months for it to get moving again. Remember the old saying, markets take about, they move for about 20% of the time, and 80% of the time they're figuring out what to do. Someone fill me in the comment section with that quote. But going back to 2012, 2013, you've got, this is on a weekly chart, so just rounded, 27 weeks from the peak until it actually cleanly broke out with a close above that peak and wasn't just a test. 189-ish days, so just over 6 months, a week over it. I'm sure you guys can spare me a week. You've got the next one, peak until the breakout here, 154 days, so 22 weeks. Then you've got the April 2013, 210 days until it closed above that peak, 30 weeks that is, so 210 days. That would be 7 months. Fast forward to the next cycle, 203 days, so a week shorter than the last, 29 weeks from the peak until the breakout close. And then you've got a few tests back here at 154 days and 168 days, but the actual close above that top is around 182 to 189. So again, 27 weeks, just over 6 months. Then we have a few options here, a few data points, multiple weeks. You still have the August dump, September high or low, takes a few weeks till it breaks out. And the most recent one that we can reference is, of course, the March into the September low. So March, you got February peak, March peak, April peak, July peak, September low, a few weeks here, and then the breakout. I personally think we're on the verge of something like this, and like this, and like this, and like this. And you've got the consolidation here. You can go back again. This is July into August, and then the peak in September into a higher low in September. We're in September, remember. It's small price ranges, but there is a lot of great opportunity in this particular time when everyone else has gotten extremely fearful. Could you imagine this in 2015, where you just see it run up, break out of all these highs, and then spends the next 5 weeks dumping the shit on you from 317 down to 198, so 37%. You know, we've done 33% so far. And then for September, just to wipe it out, puts in a very quiet higher low, and then slowly breaks out. And before you know it, it spikes like an absolute bitch from 300 to 500, catches everyone off guard, quick pullback, and then basically consolidates above 350 bucks to, 480. And just a few months ago, it was back at $198. So they're the sort of things that Bitcoin can do. And it typically happens around that sort of August, September period. There, here's again, September. Look at September. The peak there, right on cue, 5th of September, the 19th of September, in that higher low, quietly moves its way out and then busts a move to a new peak, $1,100-$1,200. So on and so forth. Okay, so I wanted to get through a couple more things before I wrap up the video. We're looking at the total cryptocurrency market cap. The strong levels, 2.2 trillion, talked about that many times before. That would be your sign of strength. The weakness underneath 1.7, below 1.7 trillion. The market wouldn't be over even if it broke underneath that. Remember, we're looking at monthly closing bases underneath that level. And in terms of the volume that I've, or the price ranges that I've looked at, you can see that here is the price action just basically runs really hard into this peak. And now it's spent the last 6-7 months retracing all of that move. Probably going to find a base and move higher. That's what I think, just based on my analysis. I could be completely wrong, but that's the way I'm playing this game. As I said, I look at the macro picture here, and I think we are definitely in this stage here. A lot of signs showing that in what the governments are doing and how they're spending money and what investors are doing with their money when it comes to where they're investing, real estate still going up, etc. On the longer term here, not the daily stuff, not the day-to-day. So that's what I'm looking at with the total cryptocurrency market cap. And then for the stock, for S&P 500 and Bitcoin, some interesting signs here that we talked about in detail on our live stream this morning for members, but I'll give you a brief rundown. And what we're looking at here is how Bitcoin and the stock market move away from each other. They do slightly opposite things here around this period in the market. August, September, October. The bar chart here in the fainter lines is Bitcoin, and the yellow here with the swing chart, that's the S&P 500. So 2023, August low, September low, October low, a lower low. Bitcoin, August, September, another September, higher low for October, higher low for October, and Bitcoin took off. So that's 2023. Could it happen again? Maybe. Let's take another look back. We'll go to 2022. 2022, you've got the low here for Bitcoin. So this in the line chart in the background, the bar chart, September lows, October low. The yellow line is the stock market, September low, October low, lower low that is. You can see here this is the 3rd, this is the 28th, this is the 26th. Stock market does that, puts in a low and then takes off. One of the data points I referenced in 2022 was that the stock market likes to put in lows around October. I think it was one of the highest months that it puts in lows for bear markets, and it did it again in 2022. Now, looking at 2021, Bitcoin in the faint line and the stock market here in the darker greens and reds. You've got September low. This was Evergrande collapsing here. Then you've got October running up hard for BTC. You can see this brighter green. That's the stock market. Stock market September, lower low in September, slightly higher low in this October period here, but it basically went lower into this October low. Actually, that is October, the 1st. That's the 30th. There's the 1st. Whereas Bitcoin, it was already starting to run harder. It was already putting in a higher low there. So it took off from that point. That's 2021. How about 2020? We've done every single year now. Let's go to 2020. 2020 is here. So you got September 8th. We're coming around this period again right now. There's the 3rd. There's the 8th, right? There is the 23rd and October 2nd. Now, do note that you can see there's some gaps here. That's because you've got the S&P 500 without weekends, whereas Bitcoin obviously trades over the weekends, and the data for Bitcoin won't have the weekends so that it can match up with the S&P here. Nonetheless, on those dates that the stock market is trading, stock market is going down and Bitcoin is finding higher lows. That's 2020. So we've done 2020, 2021, 2022, 2023. Bitcoin in a very slight move where I guess maybe to the untrained eye, you wouldn't be able to notice it. That has happened in the past on each of those years, those 4 years there, 2020, 2021, 2022, 2023, where it basically starts to put in these very minor higher lows and the stock market is still going slightly lower, and then Bitcoin starts to run from that point. It's happened 4 years before. Can it happen for a 5th year? That's going to be an interesting one to watch. I'm hopeful that it does. Maybe this is that little decline here where we get that extreme fear very much building. That's what I can see on this date here, 56K at the moment, $56,300. It was a lot of fear. If this thing goes lower, you are now prepared for each of those price points to the downside. That will help you out with where the bull market may or may not end and still be a macro correction, like a healthy correction for this market. And then we've also looked at some of these subtle signs of higher lows forming for Bitcoin over September and October, whereas the stock market has put in lower lows over the same period. Like, subscribe, don't go anywhere. As much as people are saying it's a boring time, I think these are one of the most fascinating times. And to keep ourselves entertained, that's what we need to find. Some of those subtle signals that are coming up, they will help you moving forward into the future. If you remember these times now, like you saw with 2023, 2022, 2021, 2020, maybe you'll be able to see them this year, 2024. And if you do see them, because they don't have to happen, but if you do see them, it might jog your memory and think, hang on, we've seen this 4 times before. Maybe it's happening again. And you'll get those earlier signs for a larger move coming up. That's your hoping for this afternoon. As I said, like and subscribe. I'll see you guys back here at the next video. Until then, take care and peace out.